trading against smaller traders and also a bit stupid bigger players is just as important as all other nuanced methods I use to justify entering the market. In this video, I wanted to tell you about how I took advantage of smaller traders, but also took advantage of a few silly larger traders to take advantage and into the market, basically at a very low point in the market, because it actually revolves a lot around order flow, context, and understanding the way I use in this case exo charts to actually execute upon my trade. So we'll begin with a little bit of context. So heading over to TradingView very briefly. At the moment, I'm going to be talking about this specific trade here towards the very lows. Again, the software I'm going to be using and explaining through all of this is going to be exo charts. So for any of you who are interested there, literally we saw a massive move to the downside, briefly sweeping below this kind of triple low sequence here. If I was just to highlight this, so if we just take this up, 1, 2, and then you had three really high low sequences, creating this kind of liquidity run. Eventually you didn't get a very easy swing failure pattern off of this. I didn't end up trading any sort of swing failure pattern. I thought this was very obvious and a potentially overcrowded trade. You then saw a move to the downside, and I think everyone thought in this case it was going to be dropping much further down rather than seeing this kind of really swift move back up towards the upside, which is what I took advantage of. So this actually kind of mini failed auction down towards the lows is what I wanted to talk about today, because we saw a very well-defined range, clearly with support, resistance towards these highs here, before seeing this really nice deviation, failed auction, same as which we saw up here and up here and up here in many different scenarios. But this one was really good due to its order flow context, and I want to break that down for you today for kind of educational purposes, and I hope you can find it valuable and as to where I exactly entered, why, invalidation, etc. So we saw this move to the downside, and you're putting in this initial low on the market. It's very rare that you'll get a move straight down, just so you're aware of this. It's very rare you'll see a move straight down and straight back up in some sort of V-shaped motion. It does typically involve some sort of at least, a few half an hour or so of consolidation before seeing this reversal to the upside or downside, whatever it may be. Now, using EXO, we put in this initial low on the market, and then I'm interested to see what's going on next. Anyway, the context is we saw this initial low putting on the chart, and I was actually interested in what's going on between some sideways price action, because what we get is a lot of early anticipated traders being wrecked, as well as a lot of new kind of offside positions also being wrecked. It's like a double wreckage situation, which actually fueled this move towards the upside, and I'll talk you through it in actually quite a bit of detail here. So I'd recommend pay attention from now, to be honest. So you got your initial low putting on the chart, and then if we just take our profile tool, okay, I'm interested, and I've mentioned this before, so it's not the first time you're going to see me doing this, but there's also some much more complexity to this as well. So if we just take this, what I'm interested in is the OI. We'll put on OI remove versus created, okay, and we'll also change the text type to OI remove versus created, and we want the show info box at the bottom here. This show info box is going to tell us, what's going on within this small sideways piece of price action, okay. So again, on TradingView, 5 minute, whatever it may be, what's going on here, okay? What's going on in this, initial low putting on the market, sideways price action, and people could have traded this swing failure pattern. I didn't. I was simply waiting at that point for a potential market structure change, to actually, if I was going to get in, I was going to get in a structure change. This was not a structure change. It was simply just a swing failure pattern before heading lower to form this initial low setup, which I was talking about. So again, this sideways piece of price action, what's going on within it? I'm using EXO to decipher this. So CVD increasing is positive, open interest positive. That is new longs. The majority is new longs, okay? You then sweep the low with a decrease in open interest. That is where I then enter for an SFP, and you see a move to the upside. But there's a bit more complexity to this, and the reason why I think we got this massive fuel to the upside was within this specific candle here. Again, I'm using BTC USD. You'll wish to use whatever you want. But in this case, you can see this candle here, massive increase in open interest, negative delta. So what we can do here is actually, if we just put this up here, what am I interested in? Long versus short versus long new. Okay, we drag this along here. We'll do this, and then we will put this to short versus long new as well. You can see 5 million new shorts coming in at this one individual price level within this candle, which is actually the majority forming this move towards the downside. These people here are shorting, towards the bottom end of this specific candle here. So I'm highlighting it here for you to see. They're shorting just before we've taken this low, which is very, in my opinion, silly move to do. As well as all the other smaller traders, in my opinion, which are forming the majority. The majority are actually newly entering into longs. But you've got this one candle here where the actual majority within this candle are actually entering shorts as we're about to sweep the low. So you not only have a potential to wreck a lot of people who are early shorting and stop them out down here, but then offers the opportunity to then stop out these people who are shorting really aggressively if you are to pump above these highs at the very least. So you then see the swing failure pattern. Again, what we can do is actually rewind this. I'll do this for you. We'll try if it's going to work. Yep. Okay. So you can see it here. I'll actually, what we'll do is quickly reduce the speed. Well, that's not reducing it. 50x. Rewind it, and you can see here. So you can see the candle. Just go back 2 candles. Hit the play button. Okay. You can see as we're going along, the candle ticks up. And then it just, as it's ticking down, you'll be able to see as the very moment these traders actually come into the market, okay? Which is literally, let's just wait for it. You see a bit of a ticking up, bit of potential people anticipating the long to be in. And then you see the new shorts literally just enter. The open interest increases drastically. Negative delta increases. That's new shorts because the text type we've got on this delta cluster is here. If we go here, OI based short versus long new. This is only showing new positions coming into the market. Hit the play button again. Okay, and you can actually, you got a little tick to the upside, but ultimately I'm looking for this low to be taken with the majority still entering into new long positions. These new shorts, they can potentially be wrecked, but this SFP, it not only gives a really good entry, but it then just gives the opportunity to then fuel all of these new shorts to be absolutely wrecked. So if we just fast forward a little bit, you can see they're out of them, SFP, decrease in open interest, a lot of longs closing. Okay, you can actually see down here, there's actually no text. So it's a bit of an advanced tip here. There's actually absolutely no text down here within the delta cluster. What's that telling me? Because I've got the text type on only new positions, this can only be specifically down here, positions closing, because otherwise it would show text type, positions entering into the market. This down here specifically positions closing. Upon negative delta with positions closing is actually longs closing out, which is what we've identified the majority to be doing up here, which is newly longing. So they're stopped out. Now the only thing left to do in this case is to now wreck these new shorts coming into the market. Okay, these new bigger players actually coming into the market. So the idea from this trade, and again, this just comes down to psychology to the extent, is there's a lot of smaller traders making up the majority actually going long here, newly long here, followed by, I would say 1 or 2 maybe larger traders here going short towards the very low here, anticipating a massive breakdown. You then stop out all the majority smaller traders with this SFP, okay? Now the only thing left to do is to wreck these newly short positions here, which then saw the SFP, I'm already entering at this point, okay? As soon as I see that, I'm entering. With my validation strictly below the point of control. Again, very small margins here, but again, I've discussed this many times. It just gives me a bit of the edge, okay? Because I'm waiting, rather than having it below the low, I'm having it strictly, around the high volume node region, POC, to increase my final R potential reward, okay? Very simple entry and validation, and then you see this follow through. But there's a bit more to this. If we just hit the stop button, let it reload, we can see the exact moment at which these new positions get stopped out. So if we then put on the delta, the dynamic profile tool again on the left hand side, and I'm just going to take this pool, right? And what we'll do is we'll put this on OI. We'll do OI removed versus created on both of these. So now we can see the OI removed versus created, and look at this. So we can see here this is removed, open interest coming out of the market, and open interest coming into the market. So new positions coming in, new positions coming out. This is not new longs versus new shorts. Positions closing, positions opening. Okay, as well as down here, let's just look at this. So if we just put this on to, we can put this on to whatever we want. We'll put this on to the short versus long new, and then the OI short versus long new. Okay, and you can see here that you had 5 million new shorts opening. So this is opening new shorts, okay, at that level. So basically 5 million. And then it's just a coincidence that as soon as you break upon these highs, though, the exact same figure is strictly then closed out with open interest decreasing by 5 million, stopping out those new shorts at this rate, and then that's obviously part of the reason to fuel this move further to the upside by stopping out those majority, those really late short people. So, and again, this is also just as punishable for those who got stopped out towards the lows here, because essentially what's going on? Well, you've anticipated the long, you've had your stop below the low, you've then been stopped out, and then price has gone in a direction you didn't initially intended it to go in. So, it's both wrecked the late shorters and the early longers in this case, and then fuel the move to the upside. This sideways piece of price action must have been kind of agonizing for some, okay, not knowing what was going to happen, anticipating continuation in the drop. But yeah, hopefully that made sense as to why I entered this trade in particular. I will be going over losing trades in the future. This was just a very, very brief, in-depth kind of breakdown as to why this trade was really interesting. The last thing I wanted to actually cover, if we turn on the FPBS for you, Let's increase this. Okay. And we can change this setting. So delta max and minimum. I don't want to fade the text on this or on this. All right, you had extended delta down here. This was like, again, I've discussed this again multiple times. What was the final? We'll turn off CVD. I don't really like the CVD on the FPBS. So for those of you interested, and we don't need the point of control in this case. But you can see down here, the final delta was, in this specific candle, okay, was 512,000. The delta minimum was minus 6.1 million. Massive discrepancy between those two values. You've closed green. There's a lot of trap delta down here. In this case, it was those positions being stopped out early before seeing this massive fuel to the upside to stop out the majority of those late shorters. So again, hopefully you found it valuable. Alongside a few liquidations we also saw down here, the volume spike, all the specific jazz I've mentioned many times before. And yeah, that's kind of how you would trade with the bigger players, by taking advantage of what the other majority are doing, since I guess at this case, the majority don't know what they're doing. So hopefully you found that valuable. Hopefully, you can trade off this in the future. And yeah, hopefully you enjoyed. Thank you.